So here we have the scenario where we've gone up here. Now there's two scenarios you could have here. So number one, we could make a double top and pierce the highs, so we could go up a little bit higher. This would be a Bitcoin type top, right? We saw Bitcoin make that M top. The second scenario is more like the 1929, 1930 Great Depression and some other ones where you come down and you retrace, making everyone think you're gonna go to new highs. Instead, you start to collapse.
Welcome back to Library of Wealth. Today, Gareth Soloway gives his updated prediction for Bitcoin as he closely monitors the crypto market and the Fed as we approach the latter part of 2023. Soloway underscores the waning volatility in the crypto space, attributing it to many of the stock market movements we've seen in recent days. And with regulatory uncertainties surrounding cryptocurrencies, like the legal battles involving Binance and Ripple, further dampen the crypto market's vitality. As Bitcoin is a prominent player in the crypto world, it finds itself at a crossroads. Soloway points out Bitcoin's historical parallel with the Great Depression's ominous market trajectory and predicts where it's headed in last half of 2023. Let's dive into the latest interview with Gareth Soloway, where he sheds light on the direction for Bitcoin, the market cycle, and the dynamics to keep an eye on with the Federal Reserve. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
When we look at the markets, there's some key things that happen over and over again. So if we jump over to this chart here, this is the monthly chart of the S&P 500. And the reason why this is important to look at, it's called time frame analysis. And so if you're a day trader, generally you're looking at the 10-minute chart. That's what I do. Some people look at the 5, some people look at the 15, some people look at the 60-minute. But in general, for day trading where you're in and out in 10 seconds, in a minute, in a couple minutes, in an hour, you want the 10-minute chart. As you go to the bigger picture, you're going to get bigger, longer term moves. So when you're looking at the daily setups technically are going to show you basically what's going to happen over the next 1 week, 2 weeks, month. If you go to the weekly chart, you're going to see what's going to happen most likely over the next, let's say, 6 months. If you go to the monthly chart, you can likely see what's going to happen over the next 1 to 2 to 3 years. So check this out, guys. This down here, this was the dot-com bubble on the S&P and the drop, and this was your financial crisis, right? And there was your collapse after the financial crisis. Now, please note this. From the low of the financial crisis, you have not had any significant, and I say significant bear markets because you've had quick little drops that you could call a bear market, like for instance COVID, but COVID lasted like 2 months in the markets, and then we were back basically to all-time highs. And so you could see that as soon as the Fed started printing money, the market started to take off. The culmination of moves, if you look at any cycle out there, the culmination of almost all the moves is when you get this cataclysmic surge to the upside. Think about this. It's the final throws. Like if you're, you're at a point where it's like the final push of the race is just that last explosion and then it's done. And that's what I'm thinking is going on here. That's what's happened here. Here's your retrace, which I view in terms of the psychology of the market as your pullback. Here is complacency. Everyone has gone into this mode, and you can see it on the social media platforms. Anytime I post anything bearish, they're like, oh, he's such an idiot, all this stuff. And that to me, I read, and I want to make that clear, folks. It's one of the best indicators I have ever found is gauging public sentiment. When everyone is bullish and everyone is telling you you're crazy, chances are you're right. So here we have the scenario where we've gone up here. Now there's two scenarios you could have here. So number one, we could make a double top and pierce the highs, so we could go up a little bit higher. This would be a Bitcoin type top, right? We saw Bitcoin make that M top. The second scenario is more like the 1929, 1930 Great Depression and some other ones where you come down and you retrace, making everyone think you're going to go to new highs. Instead, you start to collapse. So we're going to watch to see where that goes. Okay, so what's your Armageddon scenario? Let's talk about where this market could go down to if you have a cataclysmic sort of catastrophe. So one of the things I've learned in technical analysis is that generally there's this tendency for markets to retrace to the previous breakout point. Let's quickly go to gold. What we can see on gold is that here you have a pivot top to pivot top, you broke out, and you had a beautiful move and you retraced to the scene of the crime. You came back to that same trend line. If we look at the dollar, let's look at the DXY. Here we have another beautiful trend line, right? Pivot lows all the way across. We broke down, what did we do? We retraced to the scene of the crime. So there's this tendency to retrace to the past breakout level or breakdown level before continuing on your journey. Basically, if we look at the daily chart of Bitcoin, I mean, it doesn't get quieter than this. I mean, look at the range over the last 5 days. Yeah, you had a little blip here and then you reversed it. You had this candle, then you had this pop over here. But all in all, crypto volatility has died. Now, why has it died? Well, number one, the stock market's been honestly a better trading vehicle. So if you look at where money is right now, money is saying, well, where is there movement? And there's more movement in stocks, right? I mean, think about Apple on Friday, guys. What an awesome drop on Apple. That's a $3 trillion company, and it's moving more than Bitcoin, which isn't even $1 trillion. And so money has gone to the stock market. There's also this overhang of what the heck's going on with Binance, with the SEC litigation, with Coinbase, all of these other things, inclusive of, is the Ripple issue really dead? Like, meaning that they're not a security, or is the appeals process going to draw this freaking thing out for 2 years before we really know, is Ripple a security or is it not? And so that's just sucking the life out of it. Now, in terms of support, I continue to be a fan of the just above 27,000 range, right? So if we take a trend line right in here, so if we just take that trend line alone, this continues to be my key support level that I'm watching. And again, right now, this is an upsloping trend line. So it's right around this level here, around 27,000, we'll call it 500 right now. So notice how it's upsloping. There's also a pivot right in here, is a support level as well, around 28.2. So these two lines are converging. And again, I've said this to you guys many times, that on Bitcoin, that is going to be a very pivotal level. If you hold it and you rally up, you honestly could break out. You could easily break out. On the other side, if it breaks, a long-term uptrend trend line is breaking, and that makes Bitcoin very, very vulnerable.
Day traders scrutinize short-term charts, like the 10-minute interval, to capitalize on quick fluctuations. However, the longer the time frame, the more substantial and enduring the market movements become. Soloway pinpoints major market events like the dot-com bubble and the 2008 financial crisis. He emphasizes that since these financial crises, true bear markets have been scarce, with only brief market dips like the induced turbulence surrounding the events of 2020. Soloway believes there's a correlation between market surges and the Federal Reserve's monetary interventions, which have, at times, propelled markets to new highs. Despite crypto's apparent lack of volatility, Soloway notes that global cryptocurrency adoption remains at an all-time high and could see further growth with the potential approval of an ETF. Amid these multifaceted market dynamics, it becomes clear we're seeing a convergence of numerous economic and financial factors that are shaping the rest of 2023 as we know it. What do you think about the latest interview with Gareth Soloway? And what are your thoughts on his cautious optimism for Bitcoin's long-term trajectory? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.